Hi there, I'm Nawar Naji, a real estate broker in the city of Toronto. In this video, I want to talk about the first quarter of 2023, specifically the city of Toronto, detached houses, semi-detached, and central Toronto condos. But before we get into statistics, I want to talk about what is the number one driver of the real estate market change for the last year and a half. And the answer is inflation. So if we look at here, the inflation chart, this is the CPI. What you can clearly see since early 2021, the inflation numbers have significantly increased, and they peaked in June 2022 at 8.1%. Now, since then, inflation has been coming down, and the latest number was 5.2 for February 2023. The data for March 2023 will come out on April the 18th. And prior to that, we have a Bank of Canada rate announcement on April the 12th. Now, likely the Bank of Canada will stay put per their statement at the end of January as well as March, because inflation has been coming down from 8.1 down to 5.2. And the reports that I've read, economists are expecting in the 4.8, 4.9 inflation for the month of March, which is good because that shows that the Bank of Canada increases have been working, are working moving forward, and there is no need for them to make any changes pending any other exterior economic factors, such as the bank collapses in the US. Let's start with the data of the past few months' sales, and I'll start with the detached in the 416. So I track a couple things here. The detached houses in the 416, semi-detached, and then condos in the central core. So DVP to Dufferin, Bloor to the Lake. Now for detached, if you can see in this chart, end of January, the month of inventory has dropped significantly. And again, that's an indicator of buyer sentiment coming back. And the sales have been, the detached houses have been selling faster and faster. And this is clearly shown in the data here. So if we look at January 2023, days on market was 29, in February it was 19, and March is 16. So you can see there's a big drop, almost half on days of market on market for the detached houses in the city of Toronto. Now, I like to look at median numbers because average prices can be skewed, because if you have sales in the very high end price, that will pull the average down. If you have sales in the lower price, that will pull the average down. Median is a good indicator. And again, you can see here the median detached in the 416 was 1.27 in January, up to 1.346 in February, and now it's 1.375. So we're trending upwards. Days of market is coming down, and that's a clear indicator that we are past the bottom of the market based on 2022 figures. Similar trend can be observed here if you look at the semi-detached. And again, since January, or I should say end of January, the months of inventory has dropped significantly in the 416. And then if we go down to January 2023, you can see 21 days on market, down to 19, and then down to 16. So again, a good drop of the number of days it takes houses semi-detached to sell in the city of Toronto. Now the median price, a little bit of fluctuation. You can see $1,080,000 was January, dropped to $975 in February, and then up to 1.16 in March. And I believe that number will continue to go up gradually as we get deeper into the spring market, April, May, and June of 2023. For condos, and again, this is central, Bloor to the Lake, DVP to Dufferin. Again, you can see the months in inventory and the bright green line have dropped. So more activities, condos are selling, and that's reflected in the days on market. So you can see 33, 26, and then 22 in March 2023. For the median price, it's going up gradually, incrementally, from 668, 683 to 698. So it's trending upwards, very gradually. And again, we'll see how that continues as we move forward deeper into the spring market. Now, all this is a lagging indicator because sales happen, but everything starts with mortgage qualification and pre-approvals, showings, and that's the figure that I do want to show you here. This is for the all Greater Toronto areas. You can see the number of showings. This is the appointments. It starts with appointments booked to look at homes, so it could be condos, detached, semi-detached. and this chart is for all of Greater Toronto Area. It's followed by offers and then sales, and then you can see the numbers that I previously discussed, which is a lagging indicator. So the first step is showings, and you can clearly see since Christmas the number of showings has increased, and you can see there it's a trend. There's no bumps, but it's continued to be stronger and stronger as we get deeper into the spring market, which is an indicator of buyers coming back to the market after sitting on the sidelines for the past 8 to 9 months once the Bank of Canada increased the interest rates. So it starts with showings. Next step is number of offers. And again, you can see the chart here. Since Christmas, New Year's, the number of offers has continuously increased up higher and higher as we get deeper into the spring market. And then the number of offers translates into sales, and that translates into average and median prices. This is an interesting chart for the 416. So again, this is just the city, and this looks at everything in the 416. So you got detached, semis, condos, and you can see it's pretty flat, if you want to call it. Like it dropped, and then it went up a little bit, then it dropped again end of January, then went up and plateaued. And there are two reasons, in my opinion, why the average price of Toronto will fluctuate, go a little bit up, nothing too aggressive. One is interest rates. So if we jump to the next chart here, you can see that mortgage rates obviously have gone up with the Bank of Canada increase, which drives the impact the variable mortgage directly. But on the flip side, for fixed mortgages, it's the bond yield market that drives those rates. You can see rates were up, but with the banks collapse in the US the last couple of weeks, those yields have dropped. And that presents an opportunity for mortgage holders in Canada because the yields have dropped and now the fixed mortgages are at a lower cost. Keep in mind, buyers still have to qualify at the mortgage stress rate. So again, whatever mortgage they get plus the 2 percentage points, I believe that will keep a lid on price appreciation moving forward. Now, the second factor is portfolios, stock market. The higher end purchases, once you get into the luxury market, 3 million, 4 million, 5 million, which will drag the average price higher and higher. Those buyers, my opinion, will wait to see their portfolios bounce back because they don't want to sell a portion of their portfolio at a loss, cash out to buy a home. It's not necessary, it's not required. They might want a larger home, they might want that bigger cottage on Lake Joseph in Muskoka. But for them to sell a portion of their portfolio at a loss to get into real estate, again, it's not really necessary. And I believe those buyers will hold back until their portfolios bounce higher, and then they'll pull to come back into the real estate market. So in my opinion, those are the two factors that will be holding the average price increases at a steady rate, higher interest rates. And again, it makes it much more difficult to qualify. And the high-end buyers when it comes to cashing out some of their portfolio to buy these homes. The last chart that I want to show you here is the Bank of Canada. And again, you can see it was pretty flat. Nothing has happened till March of 2022. Then we had 8 strong increases and it leveled off as of end of January 2023. And hopefully that'll continue to stay flat. And I believe it'll continue to stay flat pending nothing crazy happens in the US, global market. It should stay relatively flat till year end, maybe early 2024. And the key point here is once inflation is below the benchmark rate, so right now we're at 5.2 and the benchmark rate is 4.5. Once that relation is turned upside down, the inflation is lower than the benchmark rate. At that time, there's a higher likelihood of the Bank of Canada cutting the benchmark rate. But I don't believe we'll see that. Probably till later 2023, maybe 2024. Time will tell, and we'll see how things will play out. If you're looking for data specific to your pockets, please feel free to reach out. Keep in mind, real estate is extremely local. So sales of condos in Distillery District, it's a sub-market that is completely different from houses selling in Hyde Park or houses selling in Burlington. Real estate is local. It is not one brush that paints the whole market. I look forward to connecting with you, and I'll see you on the next video.